All right, everyone. So we're going to jump in here and I'm going to give you my game plan for the week ahead. This has been a surprisingly strong month. July can be a little hit or miss. I think part of it is because a lot of people end up taking vacation and traveling during the summer, middle of the summer, July. I think there's just like lighter volume. There's just not as many traders that are here every day, especially traders of my age that have kids that are home from school. You end up doing things during the summer. So usually the old saying is sell in May, go away, and then you come back in September. So there is a bit of seasonality to the market where September through June 1st, the sort of traditional school year, we do see more volume. And during the summer, it slows down. However, I have also found in my own experience that I've had some summers that are phenomenal. In fact, last year, you know what my best month of the year was? It was in August, which is very unusual, but hey, I won't complain. It was a great month. So this year, having such a strong month here in July has been a really, it's been a pleasant surprise. So I have a goal of crossing over $100,000 for the month of July. I am currently sitting at $86,696.66. I'm $13,000 away from crossing the goal. I have a very good chance at hitting it this week. And if we look at the month of July here, so far I'm exceeding my averages. My goal is about $15,000 a week. And although I came up short on the first week, we have to remember that we had the 4th of July. And then the 5th of July, which is a Friday this year, just a very light volume day. So this was the best day of that first week. And this is when we had the big move on costs, right? The meme stock that ended up going crazy. So anyways, a $9,000, almost $10,000 week, first week of the month, not bad. And then we came out of that and we had Zap and we had LCFY, and it was just like awesome trades, trade after trade after trade. Really good trading that second week. This was actually my second best week of the year, $45,000. And then last week started with a nice green day on Monday, 14,000. It was a little slow on Tuesday and Wednesday, and it was getting progressively slower. So Thursday, I was like, you know what? I better batten down the hatches and be really careful. And then, ended up being a decent green day. And then Friday, boom, we got another surprise move, solid day, finished with 31,000. So now we've got 8 trading days left for the month of July. Now I'm definitely due for a red day, so I've got to be aware of that, and I got to take that loss with grace, not let it get out of control. Just try to cut it quickly and not let it put too much damage in what has so far been a good month. So I expect there will be at least one, but possibly 2 red days within these next 8. But what I want to really try to do is stay focused on hitting base hits, getting myself in the green, getting a cushion, and then if I have a cushion, at that point, leaning in and stepping up. But just focusing each day on not coming out of the gate swinging hard, but first try to build a cushion. So when we talk about the game plan for Monday, right, day 1 of the new week, I've got to take that same approach. So what I'm going to do for Monday to start is I'm going to begin with a couple of rules. So rules, and we'll just lay this out for the coming week. So number 1, start with 5K max share size. So share size until I'm over $1,000 of profit. Now, the exception to this would be, and I'll mark it as an exception. There is an exception. So exception if trading under $2. And the reason there is because these cheaper stocks, they usually only move in like 5, 8, maybe 11 cent kind of little pops before they pull back. So for those, it would be okay to take 7,500 shares or even 10,000 shares, and that would be fine because they're a little bit tighter range. But generally speaking, for the stocks I prefer to trade, which is more between 2 and 20, 5,000 shares max size to start the day till I'm up over $1,000. And then once I'm up over $1,000, I take the cap off. Now, I'm still reasonable. I don't take 100,000 shares, but I'll take 15, 20,000 shares, maybe a little bit more if I see something that looks good. So that's rule number 1. Rule number 2 is if I give back half after hitting daily goal, which is 5K, daily 5K goal, walk. Now, I'll also say if I give back 30%, walk. And that's going to be anytime also over 5,000. So the issue here is that I had a number of days in the last week, let's see, right in this stretch, I had a number of days where I think this Thursday was good. I finished at the peak, but if we look at this day here, I no, sorry. It's this day here. This day here, I was up 15,000 and I gave back a third off the top. And I got really stubborn and frustrated about that. And then I did the same thing. I think it was on this day, or no, it was the same day. But I did the same thing on maybe it was this day. I was up nicely, gave a little bit back, ended up finishing higher. Let's see, maybe it was this day. This was the day I was up 18,000 and then gave back, a bunch. And I really want to try to avoid doing that. But what's interesting is that experience of giving back profit on those 3 days, it made me really cautious. I started to think, okay, I need to be really careful here because, for whatever reason, I'm starting to give back too much. And so then when we come onto the calendar here, I was a lot more cautious last week because of that experience the week before. So these 3 days, I gave back like a third of profit each day, and I got stubborn and frustrated. And then this day I closed at the high. This day I closed near the high. And these days I was walking away very early, and I even walked away early on Friday. If we look back on Friday, you'll see, although in spite of the overall market pulling back a bit this week, the S&P 500, we still had great opportunities. And SCRV serve ended up going from $4 all the way up to $9. And I stopped trading it when it was at like 5. So, you know what? I definitely left money on the table on this one, but I walked away with profit in my pocket, which was the right move. And it's important to recognize that you'll have a hindsight 2020 bias where you'll look at this and think, well, gosh, I should have definitely kept trading. I would have made so much money, but what if just for instance, you had been making money here, and then you took your biggest trade of the day right here and caught this dump. And then you had to stop out here. And then it comes back up and you capitulate and get back in here, and then you stop out here. And then you get back in up here and then stop out down there. Now, I'm not saying that those wouldn't be great trades, but let's just say it could happen. And next thing you know, it goes even higher and you're just getting more and more frustrated. So sometimes it's just not worth the frustration because we always assume, oh, if I kept trading, I would have made more and more and more. But that's not the way it is. We have to recognize that. Okay, so the rules for this coming week is to start each day with 5,000 shares until I'm up over $1,000. If I give back half after crossing the daily goal, I absolutely have to walk away, no exception. But honestly, if I give back 30%, and this is going to be pretty much, not necessarily when I'm up like $100, but once I'm up close to like $4,000, if I give back 30%, I really should walk to preserve profit. These are all steps I'm taking in a lot of ways to preserve capital. This is not about exactly maximizing profit. It's about preserving capital. Now, if we want to talk about, these are more rules regarding risk. So now let's flip this and talk about, we'll do this one in green, strategies to maximize profit. Okay, so number one, once up 1K, $1,000, increase positions immediately to 10 to 15K shares. So start being aggressive right away. And for me, try to knock out some quick 15, this is getting weak. I'll just do this one. Some 15 to 20 cent winners with bigger size. Because that's going to be, next thing you know, $1,700, $2,000 winners, and it's going to start adding up fast. Number two, aggressively trade the front side. So lean in with big size, big share size here on the front side of the move. So, and then I guess I would also kind of note on this walk, at the backside. So the idea here is to trade really aggressively on the front side of the move and then not trade the backside at all. And instead of feeling like, oh, I didn't make as much as I could have on the front side, I got to kind of compensate by trading more on the backside, just completely leave the backside of the move alone. And if it proves it can keep going higher, then okay, that's fine. Then we've got another leg on the front side, but really don't overstay your welcome. So if we go back to Friday, Silo, for instance. So Silo, I got a couple nice trades on Silo before they did the offering. So let me back this up here. And I wasn't in when the offering happened. I wasn't holding. If we look at this here, I traded the front side of the move right here. And then what happened? MACD crossed over right here. So I was like, nah, I don't know. I'm not sure, guys. Came back up, tried again. It did try to break, and I got a little scalp there. But then it dropped back down, and I was like, no, it's not holding. So I got out. So has to be breaking out, has to be moving fast. NAAS. This is another one from Friday where I traded the front side of the move pretty nicely, and then I just left it alone. So here we got a nice curl, break of VWAP, and a squeeze from 850 up to 1050. It's $2 a share. It's a great move. It then pulls back. I'm looking for the first candle to make a new high, but then the MACD crosses over and just keeps going lower. No additional trades. So that's my window where I'm trading. Something that I don't do this, but I'll do it just for the sake of argument right here for 1 second. So, oops. So I'm going to show you this in a different view. I'm just going to change the settings on this. So we're going to do visibility, style. I'm going to turn off the histogram. And we've got the MACD and the signal line. Let's see. So what I want to do is make this thicker here. And for the signal line, let me see. This might not work super well with this chart. Yeah, this isn't working super well with this chart. It's just for whatever reason, the scale of it. But what I've done in the past sometimes is just kind of done this as an example, just to sort of show you. I wish I could scale down. It's sort of fitting the MACD. So you can move the chart around, but the MACD is not really adjusting. I wish I could make the MACD just a little smaller. But anyways, the idea here is that I would only be trading during the period when the price is in this little range. So in other words, you could also just have your crossover right up here if you wanted, and then you're going to just keep a really close eye on trading the front side of the move. Once you get that crossover and you get that steep drop, not interested. So not interested. Okay, we're getting a crossover, maybe, but then we're back negative. And this area here, although we did get a curl back up right here, so we went positive right in here, again, we went negative. This is a messy way to kind of look at charts, but for traders that sort of need it right in your face, it's not the worst idea in the world. All right, so I'm not going to keep it there. It's not how I want to do it, but if you're struggling to double check and look at it, you could just put it like right in your face so you can't miss it. Anyways, so now let's talk about sort of my expectations for the week ahead. So let me pull up a scanner here. I'm going to grab my continuation scanner. So the last couple weeks, I've had a pretty good read on continuation, and I've had I had a great day on the Mondays because I had sort of dialed in on Sunday what I thought was going to work. So today, uh, let's take kind of a look at what the possibilities are. So first, um, I think we've got to look at Serve, SERV. So Serve finished up 185%, and it had the news with NVIDIA, which is a great catalyst. And I think that because this closed strong, it has potential. Now, it started to sell off a little bit into after hours. So it does show to me the indication that tomorrow morning it's probably going to drop a little bit and it might come back down towards the $7 area. It doesn't look exactly primed to sort of gap higher, but it could. And so the levels that I'm going to watch on this for tomorrow, certainly 977, the high. And then I'm going to watch this sort of support level down here around $7. So this is kind of the range that we're in. If we come down to 7 pre-market and we hold that level, I could look at that as being support for a curl back up. And then the target would be 977. But of course, if we break that, then we're in really good shape. Now, it also seems like there's a little bit of resistance around kind of this $9 spot. Oops. That's not the one I wanted to do. So I see back here, there was a little resistance around 9. It got above it, but then it's back below it. So I think 9 is also an area to keep an eye on. Let's see. There we go. All right. So those are our levels on that chart. And now let's just refer to the daily chart for a second on this. So this is a stock that is kind of juicy because it's a recent IPO, as you can see. So all-time high is 37, and then it's got this pretty big gap up to 23, right? It's not actually a gap, it's a window. But there's a little bit of resistance there at 830. But above that level, it's just got this candle back here from March of this year. So I think that is a good thing to be aware of. Let's see. Now, I thought that the float was a smidge higher on this than I would have preferred. So they said they had 37 million shares of its common stock, but the actual float is, I think, a little bit lower than that. Let me just pull up something here for 1 second. What do I want to do? Oh, right. Okay. I gotta log in here to my other. There we go. I'm gonna jump into this one. Pull this up. So let's see if they have anything on this company. Serve. Okay, so Just wondering what they have for financials on it. If they have much here. I'm seeing a lot of red. I'm seeing a lot of red. Okay. So yeah, this is a tough balance sheet. But let's look at their cash that they have on hand. So cash and cash equivalents. So this is probably 7.9 million. Yeah. So yikes. So they don't have, where was it? Oh, come on, down here. So I sort of look at this because find cash and cash equivalents. I just like to get a sense of, what their balance sheet looks like. Right. So that was 2021. Sorry, 2022, 2023. So they look like they're a company that's in need of cash. So now let me just check. And you can see that here as well. Although this paints a little bit of a different picture because it shows that it's increasing. Let's look to see that it's very early when a company does, when they just IPO for them to sell more shares, but prospectus. Okay, so 4.8 million shares. Okay. So We may amend or supplement this prospectus. Yeah. Okay, so they have this out to sell, and that was on July 5th, and we haven't gotten a headline that they've tapped into it. So, this I would say does present a little bit of risk, especially since their cash position doesn't appear to be super strong. Yeah. So the reason I look at that is I just start to think about, well, is this, day one is fresh news. You've got a lot of momentum. But by day two, day three, now reality starts to set in. Is this company at risk of doing an offering, raising money? Um, because if they do, then that's going to hurt the price. It's going to result in the price dropping. Do they have warrants? What are the warrants priced at? And that's where we start to worry about the effect of diluting the value of the stock by raising money. So it's at the very beginning here. Like this chart could work nicely, but the chart isn't completely absent from the context of the fundamentals, right? I mean, we know that they can be disconnected for a period of time, but they're not completely disconnected. Reality can set in. Super high volume though, 250 plus million shares on Friday. That's so strong. The thing about that is, even if they did sell 4 million shares, that's 2% of the volume on Friday, like easily absorbed. And does it really, like, if someone dumped 4 million shares of the stock on Friday at $6 or 7, like, yeah, they would make money on it. But does that really change the sentiment? It shouldn't. But, of course, when the company does these offerings, they're perceived pretty negatively. But just keep in mind that that amount of volume does help sort of offset potential offerings. So I would say Serve is going to be on watch for Monday. I'm going to put it on the side chart, but I might be a little cautious holding it around the top and the bottom of the hours, just because of possible concern about, seeing some type of capital raise news come out. I feel like we probably have a couple more days, but we'll see. It is a little confusing though. This was March 31st. When was the IPO? I guess it was March. So was this? Yeah, I'm just kind of surprised that they don't have more cash, but um anyways, yeah, it is what it is. Okay, so at least their revenues are increasing from 2023. And in any case, Nvidia believes in them. So that's definitely a big deal. Okay, so that's Serve. So now let's look at IVP. So Serve is definitely going to be on watch for Monday. IVP, this one is our has had the biggest range. However, uh, it unfortunately is pulling back a good bit. So I don't think this one's going to work for additional trades for right now. So I'm going to say that one's off the list for now. HLVX, that one's too cheap. KZIA, too cheap. SNGX, let's look at this one. Yeah, this one also is just kind of pulling back. I don't like that. VRPX. See, this one popped, but then double top up here and then came back down. I don't feel like that's strong either. Um, NAAS. Still lots of room to the 200, but really choppy and sold off hard. Probably nothing there. SISI, nope. This pulled back too much. CNTM, too cheap. ZAP, ZAPP, below the 200. Had a chance to kind of get above it, but couldn't. Selling off now. Silo, no, sold off offering. LCFY, let's see. And if we look at Silo just for a second, so Silo, so, you could see that their cash and cash equivalents, were decreasing. Since fee revenue, cost of operating expenses. So, operating at a loss and, at a point where they're going to take the opportunity to raise capital. So, it's just something to be aware of with these small cap stocks. All right, LCFY. Maybe it'd be an unusual chart if it got back above that level and pushed higher. Probably not. SDST, kind of wild, recent SPAC merger and then sold off. MLGO, don't think so. So I would say right now, going into Monday, the only stock that I really have on close watch would be Serve in terms of continuation, potential continuation. There really isn't anything else that, to me at this point, is looking quite right. And I don't know if it'll work, but that's going to be the one that I think looks good for tomorrow. And then, of course, as stated, I've got my rules for the week, both for minimizing risk, my rules for our strategies for how to maximize profit if things are hot. But I'm going to be playing, the market a little more conservatively. The wind is at my back. I've had a really good start. I just need to hold my course, maintain pace, and I'm going to have a really strong finish. So that means I'm thinking a little bit more about risk right now, at least to start each day. But the second I see something starting to squeeze and take off, I'm kind of like, okay, here we go. We've got something to work with. Let's be aggressive just for this small window. And then I'm going to go back to being conservative. And that seems to be working really well. I don't know how long that I'm going to be able to sort of maintain this hot streak. It's a combination both of discipline and the market being on my side. So I hope that it continues. When we look at the overall market, the S&P did pull back last week. So a couple days of pulling back a bit, and they weren't small red days exactly. I mean, decent pullback here, but also, kind of reasonable. Nothing really like crazy when you think about it. I'm not sure. I didn't do a whole bunch of analysis on the S&P, but you've got some levels here that maybe we come down to, but yeah, there's nothing crazy. So right now we're just pulling back. Just that's to be expected. This pullback here in April, is a little bit deeper, but then we came back up. So maybe we get another one here that's a little bit deeper and then we come back up, but it didn't seem to slow down the action that much last week. I mean, I don't think that was really why things were a little slower. I think we're just kind of in that summer trading mode where we're going to have some hot days and we're going to have some cool days. And when we look back at my metrics here, we could just switch to the last 90 days. I did have in June a number of really slow days before things started to pick up. Actually, we'll do 30 days. So like I was kind of, look at these days, really slow days right in here. But you know what? These are better than big red days. And then I had a nice punch on July 3rd, and then July 5th was a little slow. And then it was like, whoa, where'd this come from? 1, 2, 3, 4, 5, 6, 7 days, up around or over 10,000. I can't complain about that at all. So, I'm not setting any records. I'm not doing anything crazy here. This is still, I think that's the best day of the year for me, 21,000. And unfortunately I have a $20,000 red day. So those 2 days cancel each other out basically. So everything else is kind of, in the middle, but if I can keep this higher average and, prevent having $5,000 and $8,000, $10,000 red days, Yeah, it's going to be a really strong finish. So that's the goal. That's kind of where I'm at. And those of you guys that want to do a 2 week trial, I'll put a link down in the description. So you can click on that link. You can do a 2 week trial, trade side by side with me for the rest of July. And let's see how this month finishes up. So thanks as always for tuning in. And I'll remind you as always that trading is risky. My results aren't typical. So manage your risk, take it slow. And I'll see you live streaming for Warrior Pro members bright and early tomorrow morning.